I think the hardest thing is actually, with the property thing, is identifying what your ideal property looks like.
Yeah.
And then once you find that, you'd be surprised how many of those properties exist.
Welcome to the Get Invested podcast, where we share great conversations with experts from all walks of life to uncover their secret know-how on where they invest their time, their skills and their money, and the benefits that this has created. You see, the truth is that everyone invests. Every minute of every day, we're investing our time, our skills, our energy and our money in something. Some of us are investing consciously, some unconsciously, sometimes for good, sometimes for bad, and sometimes for no impact. Get Invested will help you to start living by design, not by default. I'm going to help you to make it happen, not let it happen. You will hear the top tips on how you can live with conscious intent so that you can live more, work less, and leave a living legacy by investing now. Listen to the show to discover the top tips on how to get started, make the most of your investment journey, and ultimately to be living your dream, not someone else's. More episodes can be found on iTunes or at bushymartin.com.au/get invested. Thanks for listening, and now let's get invested. Welcome, freedom fighters. Today I want to talk to you about your future. Do you have a really clear picture of your ideal lifestyle and take daily action to make it a reality? While it is something that I take for granted, given that I spent 17 years as an architect, where every day is about visualising things that don't exist, and then planning and actioning the steps over a long period of time to build them, I've come to realise that very few people think and act this way. So why is this? Is it because we are too comfortable and are happy just to drift along? Do we think we have lots of time so we just keep putting it off until tomorrow? Or is it because we just don't have the time because our lives are just way too hectic? I think author Richard Swenson sums it up best, where he says that we no longer have any margin. And his definition of margin is the gap between rest and exhaustion, the space between breathing freely and suffocating. Nailing the insight that perfectly captures the illness of our age, he argues that we must have some room to breathe. We need freedom to think and permission to heal. Our relationships are being starved to death by velocity. No one has the time to listen, let alone love. Our children lay wounded on the ground, run over by our high-speed good intentions. Who plundered those wide-open spaces of the past, and how can we get them back? There are no fallow lands for our emotions to lie down and rest in, and we miss them more than we suspect. I think he nails it right there. In my personal experience over the last 35 years, along with extensive reading, I've learned that what separates the successful from the rest is their ability to actualise. They are all actualisers, which is the combination of visualising fused with action. They all start by visualising the future, then take the necessary action steps to make it a reality. And they support this with an unwavering mindset that's built on patience, persistence, and daily discipline, expecting that success comes with time. And interestingly, they are all amongst the top 5% who are successful in any field. And that brings us to today's guest, Kim Nitschke. Kim is the epitome of an actualizer. But he's also a maverick, which means he's an independently minded person, he's a nonconformist, and he thinks outside the square, but he always follows through. So why do I say this? Because Kim is an accountant, a financial planner, a licensed builder, and an active property investor. How many accountant builders have you met? Someone who's good with both a calculator and construction, and he rolls up his sleeves and he gets his hands dirty. Kim has built a really strong property portfolio that affords him a fantastic lifestyle, including a beautiful property on acreage up in the Adelaide Hills. And he also owns and runs his own accounting practice, where he helps medical professionals and other entrepreneurs to live by design, not by default. In our really enjoyable discussion today, you're going to learn how he nearly walked away from property, never to return after his first venture, what he then learned about property that put him back on the road to success, and his best tips on how to save tax. Kim's a really great down-to-earth guy who calls it as it is. So please join me to have a great conversation with Kim Nitschke. Welcome back, Freedom Fighters. It's Bushy Martin from the Get Invested podcast. And today I've got the real pleasure of talking to someone that I connected with over a decade ago. He's a bit of a maverick, and we connected because we both had a passion for investing in property. And he's one of those accountants who walks the talk, and that's a pretty rare breed, but he's very down to earth. And we reconnected recently because we've got another mutual interest. And for those of us who know myself and the Know How Group, we focus on time-poor professionals and helping them to secure their future. Well, Kim has now got a mutual interest in specialising in helping medical professionals. So he positions himself as a medical accountant. So welcome aboard, Kim. I'm really looking forward to having a deep dive discussion with you today.
I'm really happy to be part of it. Thanks for inviting me on the show.
Yeah, great to connect, mate. And mate, for those who don't know Kim Nitschke and your accounting practice, can you tell us a bit about who you are and what you do?
Okay, so I'm an accountant based in Adelaide. I've got a satellite office in Sydney. We're sort of, I guess it's just something that's evolved over time, but as I do it more and more, I'm sort of more or less identifying who I want to spend more and more of my time with. But I've been in the accounting space for 20 years. Prior to that, I used to work for PricewaterhouseCoopers. I worked in tax there, got all my qualifications, and then woke up one day and went to work and thought, oh my God, I actually know more than my manager. It's holding me back being here, and I've got this entrepreneurial flair that is just being absolutely smothered in here. Yeah. So I went out and set up my own practice and just sort of more or less started with family and friends and operated from my home office. And that just sort of grew and grew and grew. I didn't have enough clients initially, and I think people going out in business need to understand that I did it a bit as a part-time dabble, a side hustle to start with.
Okay.
And I kept, I found an old accountant in North Adelaide who kept on going out to lunch all day and just needed someone who could just man the phone. He was a sole practitioner.
Yeah.
And I worked for him, and I worked for him for 6 years part-time while I built my business up. And I just learnt so much from him. It was just all the dialogue that I never got working for that big firm, how to deal with clients. And he was just a wordsmith. He was just so good with his clients. Everyone loved him. Hardly anyone left. And he was a big property guy, and that gave me an insight into property. What had actually happened prior to that was I followed one of my managers down a property route into property, and we'll probably come back to this and talk about this later, but
yeah.
I had spreadsheets and rental numbers that just showed phenomenal returns on unit investments, and I went down that track and I lost some money on that, and I vowed I'd never go back to property after that, but lo and behold, once I started working for this guy, he showed me how to actually make money in property, and so I started my own journey down that property track. And while I was building up my practice, I also didn't have enough clients, so to occupy my time, I researched and got better and better at investing in property. And so I had a couple of things happening all there at once, part-time working for him, part-time building my own property portfolio, and part-time building my accountancy practice. And that has all grown over time. Now my accountancy practice in Adelaide is, we're too big to be called a medium firm now. We're sort of large firm. We've got 6 staff. We do 1,500 clients. It's all systems go. We have now gone into the social media space. We do podcasts and that. And we've got people approaching us from all around Australia. So it's a very exciting journey that we're on. I'm a bit like Warren Buffett. I love what I do. I sort of tap dance to work every morning. And, behind the scenes, I've got a really strong property portfolio that just gets better and better every year. And that has been a bit of a core in my whole accounting ethos. Okay.
You covered an enormous bit of ground, and you've given us a really good snapshot from end to end. I'm going to break that down a little bit now, Kim, and sort of delve in a little bit. And I want to go right back to the decision you made actually to get into accounting, because the conundrum for me, Kim, is that you're clearly entrepreneurial. There is a maverick streak in you. A lot of accountants are extremely cautious and very conservative. You don't fit that mould at all. What is it that attracted you into the accountancy profession from the get-go?
I really just fell into it by default. When I was at university, when we were actually filling out the forms when we were in year 12, I was so busy with my study load that I think in June we had to make a decision about what we're going to do in university next year. And it was a decision that was going to impact us for the rest of our lives. And I just asked all my mates who were filling out the same forms at the time, what were they all doing? And they all said that they wanted to be accountants. And I'd never heard of what an accountant was. I'd never met an accountant. And they just said to me that they make a lot of money, fill in the form, and you'll be right. And for me, that was what, it was crazy as it seems now. That was one of the best things that I'd ever done in my life, was sort of go along with them. It actually ended up that I think there were 6 of us who were all in A maths at school. And being an accountant is a lot of maths. So it sort of came naturally to me to go down that track.
Okay.
And it's funny because of those 6 people, I think there's maybe 2 of us who are still accountants. One of them's gone on to be a doctor. A couple of them have dropped out. But for me, it's been a funny love-hate relationship with accounting. Everyone's told me that I'm not the typical accountant. You're not boring enough. You don't wear the cardigan to work. And I sort of find that as a positive because accounting's such a broad profession that there's room for people like me who are the entrepreneurs who sit in that space as well. Yeah. And when we're up against someone who is the conservative, low risk-taking, quintessential accountant, it's like we're worlds apart when we're having meetings, and it sort of makes clients sort of gravitate after the meeting. They'll ring me and they'll say, "Oh my God, can I leave that guy and become your client?" But the other thing with accounting too is just such a good income stream. We look after our clients. They're not here today, gone tomorrow. We've got clients that we've looked after for 10, 15 years. Yeah. And every year that money comes in, which is great from a business point of view. Banks love us. It's great from our ability to borrow.
Yes.
But we can develop relationships with clients. And, my top 10 mates would all be, my top 10 clients in my accounting firm. So I think that and the profession is great too, because it's not unlike lawyers who've got a bit of a bad name about overcharging and, accountants are always seen as the trusted advisor, the good guys.
Yeah.
Very few people can complain about our fees. We fit into culture quite well. Yeah. There's a bit of respect when you say that you're an accountant and you run your own business, and I like that.
Yep. Yeah. Yeah, no, I love it, mate. Let's move on from there. So you did the degree and then got into accounting and went through the big firm exercise, and clearly that wasn't for you. I can imagine that it'd be trying to press a square peg into a round hole. You had way too much personality and asked way too many questions for the very structured format of those big established firms. But there's 2 things I want to delve into that you've mentioned already, and that is the part when you were doing the part-time hustle and you found the accountant in North Adelaide that reopened your interest in, 1, that style of accounting, but 2, the property sphere. Before I do that, talk to me about the first dollar you invested in property. And you mentioned that you were never going to do it again. Give us a little bit of detail around that and why you'd come to that conclusion as a starter, and then we'll move on to the experience you had with that accountant in North Adelaide.
It comes up again and again, and I think people actually learn off this, but it's hard for me to talk about it because I'm so embarrassed about it.
Don't be. I've made massive mistakes in property, mate.
Yeah, so I was really ambitious, and I went to the ANZ Bank in Mount Barker and asked them how much I could borrow, and they said $80,000.
Yeah.
And you couldn't really buy much at that price. So I went down the road, and I think the firm that I ended up going with was Bank West, who's no longer around.
And they said, Bank West are, but Commonwealth Bank have bought them, so they're still badged, but they're just an extension of Commonwealth Bank, really. But yeah.
Okay. So I went and saw a clever bank manager there who was referred to me from a manager at PricewaterhouseCoopers.
Yeah.
And through some careful constructing of spreadsheets and rent forecasts on some properties that I was going to buy, they would give me $180,000. So I went out and I bought a property in Littlehampton. It was an old Art Deco house on a massive block, and I worked out that I could get 2 extra blocks and keep the house as well. Yeah. So that was a good part of it. Yep. But then I actually ended up buying 2 units down the road, who were 2 units in a group of 3, and I paid $60,000 for each of those units. Yep. That was my disaster. Right. I was paying $60,000 for those units, and they were giving me $120 a week rental return. I can remember as clear as day.
Yeah.
And I thought that was a masterstroke because, there was so much rent there. Yep. It was going to well and truly cover my interest. And I thought I'd be off the races and there'd be no problems at all. Yep. What I didn't understand, and I didn't do the fundamental analysis on the Adelaide Hills, there was a town down the road, Mount Barker, where they were just releasing thousands of blocks of land each year. Yep. People were buying those blocks of land and building new houses. And in the end, my $120 a week tenants left my unit because for $160 a week, they could get a brand new house on a full block of land in Mount Barker.
Yeah.
So I can remember this. This was terrible. I'd go in there and I'd collect the rent in those days in cash.
Yeah.
And all my tenants were unemployed. And I can remember going in and sitting down at the lounge room table with these guys, and they had a list of all the DVDs that they had watched, and they'd give them a rating. So that every time they go to Blockbuster Video, they wouldn't hire the same movie twice. And, it was just bizarre that this is the way that these people operated. I became good friends with these tenants. They left and they didn't actually go to a new house. In the end, I don't know why, but they were at the Mount Barker Caravan Park. I tracked them down after they left my tenancy, yep, and offered them to come back and knock the rent down to $100 a week.
Yeah.
And I got them back, but, my tail was between my legs because I've been chasing these massive rental returns, and all of a sudden, those rental returns are getting smashed out the park. Yep. I ended up selling those units. I renovated them. I ended up living in one of them. It was just awful. I was there doing gardens and, new moss rock garden beds out the back, all trying to add value to these rundown units that I was trying to turn into much more valued assets.
Yep.
And in the end, I ended up selling them, I think, 5 years later for $60,000 each. So, if you took out the stamp duty I paid and the commissions to agents, it was not a good exercise. I lost money on them. It was actually got to the point that when I lost my rental return, and I was living in one and I had these tenants next door, I ended up walking away from accounting and going and working in an underground mine in Cobar.
Right.
Because my salary went from $21,000 a year to $60,000 a year, 2 weeks on, 1 week off.
Yep.
And that was the way I clawed my way out of my debt hole that I'd created for myself.
Yep.
And I sold the properties. I ended up with $50,000 after I'd sold, the 2 units and the house with the 2 blocks on the side. I did a right out of that house, but the losses that I'd engaged in the units sort of, I ended up with $50,000 somehow.
Yep.
Anyway, I vowed at that point when I was all clear that I'd never go into property ever again.
Interesting. And it's not an uncommon story, Kim. The stats are really interesting, mate. And you probably know this, but 50% of first-time property investors sell the property within 5 years, and most of those never return. And it's all because they tend to focus on the wrong things. They focus on the price of the property and they focus on the property itself, but they don't look at how to structure it, how to cash flow it, so that affordability piece is really important, so that it's not impinging on lifestyle savings and salary to prop the thing up. And it sounds like you learnt some important lessons early on in that regard, and I admire your courage for saying, right, I need to get out of this. I'll just drop the accounting and go mining for a stretch to get the cash. There's not too many people that would have the balls to do that. So that says a lot about you as a person in relation to the courage that you have to back yourself and have a crack.
Just on that, I've got to tell you a story because I got in my little Honda Civic at the time, and I left at like 6 o'clock in the morning to drive to Cobar, and my mum gave me $300 cash, and just said, "Don't tell Dad," and I headed off down into the sunset. It was just like, it was one of those low points where you look back and you think, and I think she even said, "Don't put this towards the black hole, spend it on yourself." And, those sorts of moments, you look back and you think, oh, God, things are so bad.
Yeah.
And it makes you so much of a better person to go through that, I call it the dark night of the soul, because everything's picked up from that, and it's, looking back, it seems crazy that I was ever thinking that. And also, just to go back and talk about those units today, if I would have kept them, they're probably worth $120,000 each now. They've doubled in value, but I didn't cash flow it well enough to ride out through that storm.
Yeah.
I threw in the towel too early. I was sort of what I call now a nervous investor.
Yeah. And again, that's not unnormal. I think that the challenges that a lot of first-time investors have is that they don't trust anyone, so they try and do it all themselves. And I'm talking about myself here. I did exactly this as well, by the way, mate, with my first venture in that regard a long time ago. And as a consequence, you don't know what you don't know, and you focus about the property because that's the only bit you do know. You live in one, so you think, well, how hard can it be? I'll just go and get some more of the things that I live in or similar to or whatever I can afford. And then, but it's the properties, as you would know, is actually the last thing you look at. If you got to get your structuring right, you get the finance right, because property is very much a game of finance. You get all of the other surrounding benefits in play before you even look at the property, and then you've got a more than better chance. So let's transition now then into that. You had the opportunity to work for the guy in North Adelaide. How did that come about, by the way? What attracted you? How did you find the guy, and how did that work?
It was just word of mouth. He was looking for a guy to sort of go in and do his back office hat work. The guy that he had working for him for like 15 years had developed cancer, and he had that moment where he said, oh my God, I've got 18 months to live. Yeah. I'm not going to do any more work anymore. So he basically just walked out the back door of this office.
Yeah.
Left the keys on the desk sort of thing and said, I'm never coming back.
Right.
And there was a gap of about 3 to 6 months where no one did actually any work on these clients' files. And I knew the software that this guy was running. And I went in there and I said to him, look, Happy, I know how to use the software. I think I can offer you a service. I want $50 an hour. And he looked at me and he said, God, no one's paying $50 an hour, but I'll keep you on for a couple of months just to get my big client's work done, and we'll take it from there. So I was sort of, it was a referral from a friend. So he sort of, kind of knew me. I sort of knew the circles that he was mixing in and rubbing shoulders with the heavy hitters in Adelaide. So it was a golden opportunity for me, and it was a perfect fit for where I was at. Yeah. And, so it all started from there.
Yeah, and you were with PwC or PKF before that? Is that one of the bigger practices, and you were just over it and looking for something to get your hands dirty with? Was that the driver?
Yes. I think if I actually go back, I went PwC, then I went PKF Mount Barker. Yep. I left there, went mining.
Yep.
And then came back from mining because I burnt myself out in 12 months. It was crazy. I was sort of working 24 hours a day. Ended up going from a labourer to becoming financial controller for that company. And then transitioned basically back to the profession. I always wanted to sort of have my own business as an accountant.
Yep.
So I knew that, working for a mining company as the CEO or CFO was never going to be where I wanted to be for the rest of my life. I always wanted to be my own boss, controlling my own destiny.
Yep.
And I knew that the accounting route was going to be able to help me with that.
Okay, so you got on board there, and you mentioned earlier that he was quite inspirational to you in terms of the way he dealt with people. Can you sort of delve into that a little bit more about what you learnt and how that's benefited you on your journey with what you're doing now?
Yeah, so he drove Porsche, and I remember every lunchtime I would sit outside in his carport and just drool over his car, looking through the windows, pretend I was driving it, just visualise myself in that. I finally met someone in my life that was my role model. Everything he did, I tried to replicate. The way he spoke, the message that he put on his phone, I copied. I ended up, ironically, buying a Porsche exactly the same as his 10 years later, and I took it back to him and showed it to him, and he actually liked my colour of mine better. And, he was so good in the way that he's so client-focused.
Yeah.
And, he this is one example, instead of talking about Section 25 of the Income Tax Assessment Act, Section A, little...
paragraph 3,
paragraph
1.1.
Exactly. Instead of doing all that, which is the way I'd been trained at PricewaterhouseCoopers, he would just talk about tax loopholes and things like that, which people could understand and sort of more storyteller-based than dotting the I's and crossing the T's and sending out a 10-page letter that no one reads.
Yeah, awesome.
You know, and he was just a really clever guy, and you could just tell that it wasn't a lot of emails back then, but more sort of telephone communication. Every response he gave to every client was well thought out, very detailed, very client-focused, and very clever. And that was like a light bulb moment for me. You know, and every time he'd do a set of financial statements and tax returns for his clients, he'd sit down and he'd look at me and go, is there a better way? Let's not set it out. Let's not send it out yet. Can we save this guy any more tax? You know, and it's like, you know, that's introducing the smarts into the accounting world, and that's what clients love. And because it's just, you know, Adelaide, when I set up my own accounts practice, I look back at this time and time again and think, Adelaide didn't need another accountant. They needed another more clever accountant than all the guys down the road.
Yes.
And that's what I've always tried to be.
Yeah.
You know, every time a client rings me, it's like, I want to run their business as though it's mine.
Yeah.
I want to, every bit of advice I give them, I want it so that it's so clever and it's so thoughtful that they're going to come back in 10 years' time and go, oh, that was such a great advice that you gave me that 10 years ago.
Yeah. Awesome.
Yeah, and this guy, like, this guy in North Adelaide, he was just such an inspiration to me. You know, he'd go out to lunch with his client and he wouldn't go back to the office. You know, like, we'd get daggers when we went back to PricewaterhouseCoopers and we'd been out for an hour and a half and the lunch break was only an hour.
Yeah. Billable time.
That's right. But over his lunch, he'd be with all his clients, and over a bottle of red wine, he'd be doing business deals.
Yeah. Yeah.
And the other thing that I learned from him was he had massive debt. He had a massive property portfolio, and he'd get into work, first thing he'd do every morning was check his bank balances. And so all of those aspects I'd introduced to my life. Like, with the property thing, I would sit down and say, well, like, I've just had such a bad experience in property. What would you do? So he would sort of mentor me.
Right.
And it was at that time I read a really good book too called 7 Steps to Wealth by John Fitzgerald.
Yep.
And it reignited my interest and love for property, because finally I had 7 steps on what I could do to actually make property work for me.
Yes.
And so I kicked them around for probably about a year before I was prepared to put my toe back in the water and re-enter the property market.
Okay, so what was different then? Let's look at your first experience and then look at what you did differently through the guidance of the accountant in North Adelaide and Fitzgerald's book. What was both the learnings and the difference in approach that you then adopted?
I think for me, the major change was that I was just far too naive to start with. I think that, and I see this often now, there's just so much research that you've got to do into any property purchase. Like, so I find now that if ever I'm talking to a real estate agent, when I've done the research and I've narrowed it down to a property that they might be selling, I know more about the suburb, I know more about the property than they ever will.
Yeah.
You know, like, for example, I want to pinpoint suburbs in Adelaide that I think are set to take off. Yeah. I don't just, you know, if you read all the literature, it's basically everyone, I found, and I was guilty of this the first time, you know, if you're in property, you're going to make money. Well, that doesn't happen. No. You've got to buy the right property. Yeah. You know, so for my first property, I bought in Glenside. Now, I'd identified that Glenside was half the price of the suburb alongside of it, which was Toorak Gardens. And there was a stigma with Glenside being next to the Glenside Hospital, which was a mental asylum. Yes. So I thought that at some point that suburb would sort of equalise with Toorak Gardens. Now, so I ended up buying... Sorry?
Good insight there, Kim.
Yeah. And that proved to be correct. Like, my first house I bought was in Glenside. Yeah. And I bought it at auction, and it was a rundown house on a massive block with a massive upside for me to be able to do a renovation on this place. Yep. Bought off of an old granny. Yep. She was about to go into a nursing home, and they were advertising it at, I think, 170,000. I offered her 180 or 190 before auction.
Okay.
She rejected it.
Yeah.
It was being sold by Adcock Real Estate.
Yep.
They did an auction on the street, and I remember every bid I did over $200,000. She was sitting on the front veranda laughing at how much I was paying for her property. You could hear it during the auction. Anyway, I ended up buying for $232,000.
Yeah.
And, in that first year, buying at auction, often you get a valuation.
Yep.
And it comes in and you get grief from the bank saying you paid too much or whatever.
Yeah.
And I had that for the first year or two afterwards.
Yeah.
But I ended up selling it for about $660,000.
Nice.
Nice. 7 or 8 years later. So it was a really good deal, but I'd got the fundamentals right. I'd identified a suburb that was going to go up.
Yeah.
I bought something that I could renovate and add value to, artificially orchestrate capital gains.
Yeah. Yeah.
Put a tenant in there, was getting good rental returns. Not spectacular like my first unit, but just good, solid rental returns that were going to go on. And if this tenant moved out, there'd be 4 or 5 people behind them who'd step in their place and pay that sort of rent.
Yeah, well, what I'm interested in delving into a little bit as well is what was the driving strategy behind that? Because in my recent book, The Freedom Formula, I talk about the capital growth to cash flow curve, and that there's always this argument you see from various spruikers and or so-called property experts about the pros and cons of cash flow versus growth. And as you would know as well as I do, if you haven't got a nest egg that's going to be giving you the sorts of income that you need to live comfortably, then you need to be focusing on growth. And then once you've got the nest egg to that level, yes, then convert that into cash flow so you've got time back on your hands to do other things. And to me, it sounds like that first venture into property for you was more driven by what you thought the cash flow was going to be potentially than looking at what a capital growth
Exactly, 100%.
Yeah, okay. And was that a change? So the Glenside property was more a growth play? Was that in the back of your mind when you were looking at that property at the time?
Yeah, it was. I was now, rather than what I was going to be making off my rent each week, I was looking at what's this place going to be worth in 10 years' time.
Yeah.
What's that suburb going to look like? It was full of oldies when I moved in, and when I moved out of that place, it was all young yuppies living in the street.
Love it. Yeah.
So my fundamentals had changed.
Yeah.
I was now. I mean, I was always interested in getting rental returns, but they weren't priority one. It was the capital that I was chasing now.
Yeah. Yep.
And that word.
Yeah, brilliant. So let's go a little bit further with that then, because from the little bit that you and I have spoken about in the past, you've got quite a sizable portfolio that you've built up over time now. And can you take us through the transition of your thinking? So you went from cash flow to growth, and that was a buy existing and renovate to increase value. What else has changed? So you're still buying existing? Are you building, or are you buy building and selling? Are you buy building and holding? What's been the transition you're thinking around that property journey for you, Kim?
My property portfolio is predominantly old houses. I mean, I think everyone's got stuff that works and that they like, and they develop a sort of set of parameters that they work within. Yeah. My property portfolio, I've got 5 now.
Yeah.
Is predominantly big blocks, as close as I can get to the city, with an old rundown house on them.
Yep.
And that seems to work for everything, really. Like, it works that's how I bought my office that I operate from.
Yep.
It's how I bought my house that I live in on 20 acres up in the Adelaide Hills.
Yeah.
That's pretty well.
Yeah, and the thinking there is with, because in effect you're probably land banking as well by doing that. You're getting your rental income now. You're getting the growth that's coming out of those tightly held suburbs where there's a lot of scarcity and strong demand. But in the back of your head, the Are you thinking about potentially redeveloping any of that to realise some extra gains, or am I jumping too far there?
No. I've got my builder's license as well, so I love building and I love renovating, and I can just see how much value that brings to a property when you do it right and you do it well.
Yeah.
So I'll just tell you about one of my properties in Mount Barker and what I've learned out of that experience. I bought the property for $145,000 in 1996.
Nice.
And that was, I could see again that there was a shopping centre up there. It was called Bilo at the time, which I don't think is around anymore. But it was a big shopping centre which was buying a street of houses and bashing them down and putting in a car park every 4 or 5 years.
Yep.
And you could see that they were actually moving out towards Adelaide Road, so the main road. And they were sort of, about a kilometre away from that main road. You could see how they were gradually pushing out towards that main road. And at one point, they'd basically own between the shopping centre and the main road, and it'll all be car park. So I thought, well, let's fast forward 10 years and look what that car park situation is going to look like. And it was basically meant that any house in that block was going to be snapped up by them. So I thought, well, let's jump the gun. I'll go 2 blocks away and see if there's any houses for sale and buy something in that precinct. Sure enough, there was a house on the corner. It was on 2 titles. It was a massive block, 1,300 square metres, with an old red brick house in the middle of it.
Yeah.
And it was at the time where it had been valued by CBA at $196,000, and it was a divorce, which is always uncomfortable, but the agent was doing it as a favour for his daughter and selling the property.
Yeah.
I went in and offered $142,000 for it.
Yeah.
And he laughed at me and said, I'm not even going to put it up to my daughter. That's just ridiculous. I think they wanted 160 or something.
Yeah.
Anyway, he rang me back I said, well, it's your call. I'm happy to pay you that. He rang me back 24 hours later and said, you're not going to believe this. She's accepted it. I can't talk her out of it. The property's yours if you want it. So I bought it. I bashed the house down after about 5 years' time and put a shop on it.
Okay.
But Woolworths bought the rest of the block.
Yep.
And basically turned it into another shopping centre, not a Bilo, but a competitor.
Yep.
So they've constantly been bashing down my door trying to buy this block of land off of me.
I bet.
And I've been saying no. First offer was $500,000, and then it went to $700,000, and now they've just come back with $1.7 million. And I keep saying no. But
I love it.
I bashed it down, and I built a shop on that property. And the shop I got quotes from builders for $800,000. I thought, that's crazy. I ended up building it myself. That was my first building project.
Okay.
And I built it for $500,000.
Wow.
But my mortgage went up, as you can imagine.
Sure.
My rent on that property is now $100,000 a year.
Yeah. Yeah.
So it's phenomenal returns, but my debt is also high. And looking back, I'd like to be the guy who has the house on the corner of the Woolworths block, getting $100 a week, but it's worth $2 million.
Yep.
That, for me, is a good model.
Yep.
I mean, I'm happy to have $100,000 a year rent, but I kind of don't really like having the debt associated with it.
Yeah, no, fair enough. No, that it's a good call. There's a couple of things I want to sort of draw attention to in your thinking process there, and it's one that a lot of people don't quite get their heads around. And the glaring thing there, Kim, is the vision that you have of looking, because I always say to people, stop looking in the rear vision mirror, because everyone looks at RP data and realestate.com and all the reports about what's happened in the past. That's not what's going to make you rich in property. What's going to make you rich in property is being able to have the vision of saying, okay, what is going to be happening here in 10 or 15 years' time? And where's the scarcity, where's the demand, and if it's going to be a much stronger picture, then that's where you need to be putting the money. So if you know the winds of change are coming, but they're not there yet, and I'm guessing at the time you bought the place in Mount Barker, the new road infrastructure into the city probably wasn't in place at that point in time. The government probably hadn't formalised the fact that they're making Mount Barker a regional hub, and therefore there's a massive new infrastructure going into that area, and the values have been steadily rising there for quite some time now. So very insightful in that regard. And it is that forward vision, taking out the telescope rather than either the microscope or the rear vision mirror, is fundamental to anyone who's going to be successful in property. So is that something you just picked up by who you are? You're always a person who's looking towards the future and going, right, how can I benefit from that?
Yeah, I think, my father-in-law, before he passed away at my wedding, said that I'm a deep thinker. Yeah. I think I am.
Yeah.
Whenever I'm in the car driving along, I'm always overanalyzing. When I wake up at 4 o'clock in the morning, I'm constantly thinking about things. And I find that, it's wanting to rush, but it's so much cleverer for me to think and put extra thought in rather than extra effort into whatever I'm doing.
Yeah.
So the thing that, people listening, I think the hardest thing is actually, with the property thing, is identifying what your ideal property looks like.
Yeah.
And then once you find that, you'd be surprised how many of those properties exist. And that's been the fundamental thing for me. For example, with buying our house that we live in now,
yeah.
I've got 3 young boys. We were living in that place in Glenside for, where we ended up moving across the street, but we were effectively in that suburb for 10 years.
Yeah.
And I hated it because it felt like I was living in a caravan park, and all my mates were country blokes, and they'd come and they'd leave and they'd be in their V8 utes, and, as they're leaving, they wouldn't use the toilet in the house. They'd use the tree out in the street. and it was a bit embarrassing after a while. And when they'd drive off at 1 or 2 in the morning, they'd always toot as they're driving down the road, which my neighbours didn't appreciate. So I knew I had to get out of the city, and I had 3 boys, so I thought, what is it going to look like? What's my house going to look like in 10 years' time? Where do I want to live? What sort of lifestyle do I want to give to my kids? And, after I sat down and sort of brainstormed it with my wife, it was clear that I wanted a gorgeous old stone home on 20 acres within 20 minutes from the city.
Yeah.
And when I actually had that crystal clear in my mind, I knew exactly what suburbs were going to suit that. And then I went and looked and drove around the streets and looked on Google Maps, and lo and behold, 20 properties came up with the criteria that I was looking for.
Yeah.
But if you ask the man in the street or anyone else who was looking at the time, they'd say, "Oh, there's nothing available. That comes up, it's too expensive." You've got to go behind that and think outside the square and put the thought into it that no one else is doing.
Yeah.
And that for me has been amazing in the way that it's impacted my property portfolio and the growth curve that I'm on.
Yeah, I'm in great parallel with you there, Kim, because of, and I try to help people now to get really crystal clear on what is your dream lifestyle, and because it's very easy to work out what that dream lifestyle costs. So where are you living? What are you doing? Who are you with? What's your perfect day, week, month, year look like? Get really very visual around what that is, and then that becomes both the magnet, and therefore you have the commitment and the passion to want to see that through, but also becomes a compass in that you then, everything that you're doing day to day, is it taking me closer to that, or is it taking me away from that? And then, therefore, you've got a much better way of making decisions that are going to help you rather than be a victim to circumstance or react to what's happening on a day-to-day basis. So let's delve into that. So, you're living on acreage there on a beautiful bluestone home in the Adelaide Hills. Is that your dream lifestyle? And, yeah?
Yeah, absolutely. So just to follow on from that, so I've just got my Porsche. Mum and Dad were babysitting the kids. I jumped in with Soph and we went and looked at these 20 properties that we'd written down on an Excel spreadsheet.
Yep.
And we knew the owner's names, the size of the property, what's the council valuation, and the address. And anyway, one of those 20 houses, ironically, had a little A4 real estate agent sign on the fence the night that we went and looked at those 20 properties.
Nice.
So I'm ringing the agent at 6:30 at night saying, "Oh my God, I'm standing outside of this property. Have you, where does the boundary go?" And he sort of, it's up in the hills, so I'm getting bad reception. He's sort of describing, and I said, "Is it on both sides of the driveway?" And he said, "Yes." Is there an old house? He said, "Yeah, it's an old stone cottage, but you can't see it from the road." So I'm walking around the neighbours' properties, didn't ask anyone, just taking it upon myself to do all the research, and fell in love with this place. And then next morning I went in unconditional full price. There were 20 people all waiting for the open inspection. I jumped the queue, if you know what I mean.
Yeah, love it.
And secured it. And they were all the people on the list were so pissed off. And the agent rang me and he goes, you know how you've got this property? I've got a lot of upset people because of the way it's happened. And I said, well, mate, such is life. That's the way it goes. But when you know your craft and you know that you can get in, and I knew that I was going to have 2 days cooling off if I wanted to change my mind.
Yep.
It all just worked out beautifully. And I've got this house now in the hills. I renovated. I did a stone 400 square metre extension on it.
Nice.
I'm putting a pool that's out over a cliff with an infinity edge. It's just like when I drive down the driveway to my house, I feel like I've died and gone to heaven. I never want to leave the place. I want to get dragged out of there only in the coffin.
Yeah.
I've paid it off. It doesn't owe me anything. It's got the wow factor, and it's because of the hard work that I did. It didn't just fall into my lap.
No.
It's 15 minutes from my office. There's one traffic light.
Beautiful.
All of these things have been perfectly orchestrated and calculated.
Yeah.
And now everyone looks at it and goes, oh my God, how did you do that?
Yeah. Yeah. Yeah, it's so good, mate, to talk to someone who does have that vision and the follow through. I mean, not only do you have the vision to get really crystal clear on what life needs to look like for you, your wife, and your family, but you then have the get up and go and the courage to make that happen. So just the fact that you're an accountant with a builder's license, I mean that I don't think there's going to be too many of those out there. And what it's telling me is that you're a very hands-on person. So if you're going to do something, you're going to get in, roll up the sleeves and have a crack at yourself, which is quite rare because most people you'll talk to will say, well, you get an expert to do that for you. You're obviously someone who would rather getting it up to the elbows. Why is that, mate? And what's the benefit been of you being very hands-on in the work that you're doing?
I'm a really hard worker. Work ethic was something my dad drummed into me as a kid.
Yeah.
And so I really like using tradesmen and everything, but with my property portfolio, and you'll probably find this as well, Bushy, but if I've got a tenant moving into a property, there's usually such a tight deadline that I can never get tradesmen all perfectly lined up to do the job that I want at the time, at the price.
Yeah.
And I hate getting ripped off.
Yeah.
So I've just bought all the tools that I need, laser levels, DeWalt drills and, jackhammers and all that stuff. And I've got it and I buy top quality and the first job I use it for, it pays itself off. I've taught myself all sorts of stuff, but, just to give you an idea of the work ethic that I've got, this will paint a picture for your listeners. That property at Mount Barker that was the shop, it originally had Toy World in it. I moved out and I've got a not-for-profit government organisation in there.
Yeah.
They wanted me to do a fit-out on the place. Now, I was getting quotes on the fit-out for $400. My tenant only wanted to pay much less than that. I won't go into the details of it.
Sure.
But it was so tight. There was no fat in it. It was basically all of my materials that I was going to pay, a few tradies, and basically I had to do all the labour. So I basically rolled my sleeves up. And this is one example. I got the job done. I was a couple of weeks late, which they were fine with.
Yeah.
It was an awesome result, but getting the air conditioners installed, I ended up doing that myself. I taught myself how to put in a split system.
Wow.
Right, this is crazy. I opened up a wholesale account with Mitsubishi Electric because I like the Mitsubishi split system.
Yeah.
I was up on a ladder at 12 o'clock on a Friday night with my iPhone with the torch on, hanging out over a footpath, installing this outside component to the split system. And I was halfway through the job and there was some guy who was walking up the footpath and he walked under the ladder and he looked up at me with the mobile phone in my mouth, using it as a torch to find out where the screws went on the side of this building. And he looked at me and he goes, "Geez, mate, you're keen."
He summed that up.
And I thought, that's probably one of the greatest compliments I've ever received because I am keen. I'm a super hard worker.
Yeah.
And that's what it often takes to get the premium result for your client and for yourself.
Yeah.
So happy client, happy bank, happy valuation, happy everything.
Yeah. Yeah.
You know, and do you know what I mean? No,
I do. It's that dedication to want to know everything so that you're giving the very best to others. Which is quite a rare quality, mate. And the only way you can do that is to do it yourself. And I think that's why I've gravitated towards you over the years, mate. Is that your knowledge around the subject. And let's focus on property, given that's our common interest, and then your ability to put layers around that with all of what you bring to the table in terms of your accounting knowledge, but that hands-on knowledge of the property exercise really sets us apart because you adopt that approach where you're not going to do anything for someone else unless you're prepared to do it yourself the same way.
Yeah.
You've done it yourself the same way, so you're walking the talk rather than talking theoretically about these subjects that don't then encompass the ins and outs and the pitfalls. Let's face it, property's not an easy road, and I say this to people all the time, mate. There's a lot of bumps and lumps in property, and particularly if you're going to build, it's not a sit back and relax ride, but it's a very rewarding one if you follow it through and you set it up the right way, and that's clearly what you're very good at, mate. Mate, just pivoting slightly there then, and you probably found the same thing yourself in your journey with your clients, but I found over the years that most people in Australia, they invest their time, energy and money in just their work and their career, or it might be their business, and they tend to just focus on income. But there's those that have been truly successful, both that I've met and researched over the years, the ones that invest that income in growth assets that then enable them to replace their active work income with more passive forms of income from various streams. Now, you're obviously a person who is using both your business and property as primary aspects of that. Is there anything else that you invest in, and what is it, and why, mate?
No, I'm overweight in property. I've taken massive risks in property. I like shares, but for me personally, I haven't had good experiences with shares. Similar, I guess, to my first property situation. I like shares, but I dislike the headspace that they take when I invest in them.
Yeah.
Like, I think that I'm just as excited as making $3,000 on a, Woolworths share trade as I am. I mean, that takes the same amount of mental energy for me as it does to make $1 million on a property transaction. So I'm trying to protect, the amount of effort that, the amount of work my brain's doing in that space. So I don't want to be buying the Financial Review and looking up share prices every day and thinking, oh my God, have I got enough money for a coffee today or not? I've just completely closed that chapter. I've got my own superannuation fund, but I'm just in managed funds now, and I just find that choosing managed funds is enough for me, and I can get my good returns, but doesn't physically require the amount of thought process that active share trading would. Yeah,
I love it, mate. I've been on a similar journey as I think we've talked about in the past, where when I transitioned out of architecture into our current game, I day traded for a period, and I found it mentally exhausting. It was a real roller coaster ride. It ended up absorbing way more time than I at first anticipated, and that emotional stress, that sleep at night factor was, it's again, same thing. I'm a bit of a control freak, and you have no control over what the market's doing, whereas you can influence the value of property. And I'll be interested in investigating this with you as well, because in researching my book, The Freedom Formula, I had a really good look at that question: why property, and property versus shares, because everyone has that discussion. And the conclusion I came to was that if you don't have a deposit, then you need to get it, so you can't go straight into property. But index funds or managed funds are far less stressful, less engaging, but just as rewarding if you look at it overall in the context of that. And property and shares, if you go right back to 1924, you can split hairs between what the growth of those has been. But the fact that the banks will still let you borrow, 90, even up to 95% of the value of the property, and banks don't take risks. They're about making money, versus margin loans at 40 to 50% means that from a leverage perspective, even if they grow at the same value, or even a property slightly less, you're going to end up with a much bigger result to your nest egg over the long term. So has that been part of your thinking, or is it just that from a mindset perspective, the property side is more comfortable to you in that sleep at night factor?
Property's just a better fit for me. Like, when you're looking at shares and managed funds and all of that, I typically view these guys to be reading buckets and buckets of ASX announcements and speaking to their brokers every day and finding out, what are the buys, sell and holds for the day and why, and then you cross-check that with another. You get clever, so you get a couple of brokers, even though they think you're only dealing with one, and that's the shares to me. But property is a different beast. Like, property is dealing with tradies, and I love working with tradies. It's getting your hands dirty.
Yeah.
It's picking up the rubbish in your yard. It's getting someone in to mow your lawn. It's speaking to interior designers about how you're going to make the property look better.
Yeah.
I just like that, and I like the way that I'm developing relationships with people over time. And I've got all my tradies that. I've got my electricians and plumbers and all of that I can ring at 8 o'clock on a Sunday night and say, oh my God, the hot water service has exploded at such and such property. Can you be there first light in the morning?
Yeah.
And that's for me where property's at. And I like the whole journey and everything surrounded by it. And also, I like the ethical nature of property. And I don't know whether people will understand this, but if you make $200,000 or $300,000 on a property deal and you go out and buy a new Mercedes, everyone at school wants to know how you've made the money. If you explain to them that it's come through property, well, that's fine. But if you're like a lawyer and it's been from charging $700 an hour, well, then that's not so fine. You know what I mean?
I do.
Like, our Australian culture thinks it's cool to make money through property. It's fine. It's perfectly acceptable.
Yeah.
So there's a bit of that in there as well.
Yeah, that makes perfect sense. Yeah, and I'm like you. It's tangible for me. I can influence. I do have more control over it. I can touch it. I can feel it. There's a whole level of comfort there with me that I don't have in the equities market. And interestingly enough, when I was doing the research again, Kim, one of the things I found is really interesting, even though that the equities and property are pretty similar from a growth perspective. One of the stats that really stuck out to me is that only about 0.1% of share brokers and or financial planners outperform the index when it comes to shares. Now, that spoke volumes to me in the context of, well, okay, I'm better off just putting some easy money and lazy money into an index that can just look after. And it's the same thing, I don't need to look at it every day. As long as I'm confident that over the long term, the market's going to head in the right direction, I just get out of the road and get on with life. And that's also a big part of property. If you've set it up pretty well, then it doesn't impinge too much on your lifestyle, but you can get your hands dirty if you want and need to at certain times. Yeah, okay. That's brilliant, mate. All right. Let's sort of then draw attention to what has been the best and most worthwhile investments that you've ever made to date, mate, and why is that the case?
Well, it's probably any one of my 5 properties. I've now decided that I'm going to take all the properties I've got with me to the grave. Every property I've sold, I've regretted. If I look at the properties that I've bought, probably the best one from a numbers point of view is that Mount Barker one that I was telling you about before. That's just like winning the lottery, that one. I never thought it would be as good as that in terms of, knocking back those offers is just ludicrous. But I just think it's still going to get better and better. Yeah. So I'm just happy to hang on to that one for ages. But that's been the best investment for me, period. Yeah. I think 2 other things come to mind. That property up at Ashton that I've got, the one on the 20 acres. Yeah. Like every day I think of how I can make it better, and it just honestly gets better and better. And like every time I do something there, like for example, it's got triple insulation in the place. I've got underfloor heating. You know, all of that just makes it incredibly easy to live in.
Yeah.
And I get value out of all of that effort that I've put into it every time I get home at night.
Yeah.
You know, so that has been a really worthwhile exercise. You know, like I think you read the property books and the guys say, well, you know, there's one set of rules for your investment properties and there's another set of rules for the house you live in. More or less meaning that don't expect to make money on the house that you live in, because they just go out and spend a fortune on it because that's a reward for what you've done. But I've actually used that as a leverage to make money on as well. And the house, the thing I love about Principal Place of Residence, and I don't think this is emphasised enough today, is that it's tax-free. You know, that's the greatest loophole in the Tax Act today is buy a house, renovate it, go to Bunnings every weekend, watch the YouTube videos on DIY renovations. Every day, every dollar that you spend on it, you're adding value.
Yeah.
When you go to sell it, you'll have a chunk of money that you never had before, and that'll all be tax-free in your bank account.
Yeah, no capital gains. Yeah.
You know, so I think that's really... The other thing that I've done is I've invested in myself. You know, my business is going great guns. It gets better and better. Every dollar I've spent in my business, I've got back fivefold, you know, and every time I buy a new photocopier, every time I update my computers, every time I buy a new server or whatever, I always think, why don't I do that 2 or 3 years beforehand?
Yeah.
Now I'm, you know, doing the podcasting and the social media thing. That's getting a real lot of leverage for me as well. I'm wishing I should have done that sooner and done it better and gone harder. You know, so I think investing in yourself for everyone out there, like listening to podcasts, reading as many books as you can, grab a mentor, get people who can speak into your life, who are on the journey as you. If you want to go into property, get, you know, people Bushy to give you advice on what he would do in that situation because he's done it and made money and his system works. Use his knowledge and expertise. And if you're in accounting like me, find someone that's had the best accounting firm in Adelaide and get them to mentor you. They get so much enjoyment out of that.
Yes.
And, you know, speaking into your life and giving you tips and all the issues that you're dealing with, they've dealt with and solved in the past. So why reinvent the wheel? So, yeah, for me, it's, I guess, yeah, all of those three sort of areas have been what I've shown has been my greatest investments.
Yeah, no, awesome, mate. And the from my own side, and I just want to investigate this a bit with you. I know that myself and my fantastic wife Sonia, if it wasn't, and we're a bit of a yin and yang in relation to the way we operate. We're quite different in lots of ways, but it's the combination and the synergy between the pair of us that has really allowed both of us to flourish and enjoy the lifestyle that we now have. And it's a subject I like to delve into a little bit. How important has the support of your partner been in your success, and how does that work?
Yeah, well, Sophie, my wife, she's a dentist, so she decided when we had kids that she would forego her career and just keep the home fires burning.
Yeah.
But that's been a tremendous help to me. It's a bit hard for our boys to understand because most of the other mums at school or work.
Yeah.
But I had a mentor who said to me that, like, for him, his wife not working and supporting him meant that he could be much more successful and influential in his business than if both parents were both working at 2 jobs. So she's been really, really important in my whole journey. And, you know, if I come up with a property idea, she's always my acid test. She's my handbrake.
Yes.
I get really excited about a new office that I've found on the way home from work. And she'll come back and go, but Kim, there's no parking out the front. And I'll say, oh, but they can park out the back. No, it's not the same. There's a bus zone there. Or, you know, she just sees stuff from a different perspective. She'll see a house and think it looks cute. And everyone else can see that, but I can't see that. She does all of the renovations inside. Like, she's done the amount that we've spent on our garden up at Ashton. Oh, my God. You know, it's phenomenal. But we've now had someone's approached us and wants us to go in the garden scheme. You know.
Wow.
So,
yeah.
You know, she's doing that. We're looking at buying another property at the moment. She's been on the computer for the last 5 days crunching the numbers, driving the streets, taking photos.
Yeah.
So, I won't buy a property unless she's 100% committed to it.
Yeah.
There's a bit of an insurance policy because if it does backfire, not that they ever have, but we both share a bit of the burden of that rather than her saying for the rest of her life, I wish she'd never bought that property.
Yeah.
So we're on the journey together. And it works really well. So, I bounce everything off of her and I rely on her and, I'll never do anything without her blessing.
That's awesome, mate, because it's on a parallel tack. I mean, you deal with a lot of medical professionals, and like we do, and FIFO workers are no different. We've spent a lot of time in both of those areas. And what we've found over time is that the ones who do really well are those that one party is making the income. So let's take a medical professional. They're very time poor. They don't have time to scratch, but they're generally making very substantial incomes. But their partners are then taking that income and turning it into wealth. And I think it's that combination where whether it be husband or wife, because it's equal these days in that capacity in both of those industries, really. The real opportunity, I think, in a relationship partnership is for one to generate income, one to create wealth that will end up replacing that income long term, rather than those that try and do it all themselves and it's always going to happen tomorrow and never does. And as you know, mate, time is one of the most important ingredients in growth. So as a model, that's something that we certainly talk to a lot of our clients about, engaging both parties to make sure that they are on the same journey and then understanding each other's roles in terms of how to make that happen. So do you do a similar thing with the medical professionals and specialists that you deal with, Kim?
Yeah, I see it time and time again, to the point where I don't really want to have a meeting unless both parties are there.
Yes.
Because if they're making decisions, it sort of to some extent falls on deaf ears if there's only one person in front of me that I'm preaching to. So, I think with the professionals, it's the same sort of thing. A lot of the doctors that I deal with, the wives don't work, but they're just as involved in making money or adding to the collective wealth of the family as the husband is, who's the breadwinner, and vice versa. I'm seeing it more and more with the doctors. A lot of the young doctors are coming in and seeing me, and I'm saying that they do. Like, for example, recently had a couple come in. The wife is a doctor. The husband was going to buy a bloody coffee shop, and the wife was going to pay for it all. And I said, "You're mad! Like, just, you don't even have a house. Let's get a house and get him renovating the house while you're at work. And you go to work for 6 days a week doing your GP thing. And he will be at home building a beautiful house for you using all his engineering talent. And, he'll add just as much value as you will working all day. And, so I see that time and time again.
Yeah.
And I think that, if they get the strategy right where they work collectively as a team, and the girls, they are so good, whether we like it or not, with administration, recording all the data. Like, if you've got a property portfolio, they can collate all that and give it to the accountant, deal with the issues that the rental property managers need answers with. Whereas, your husband who's on FIFO or a doctor or whatever, he's generally going to be not going to have the time to deal with that on a day-to-day basis.
Exactly right. And if that spare time they do have, they're exhausted anyway. So, that's awesome, mate. Okay, well, look, I want to sort of bring us back to what I call the ambush round, mate, which is the bushfire lightning round of questions that just cover off some things that most of the listeners have a real interest in. So, to kick that off, what's your favourite quote and why?
I think it's Gary Vaynerchuk, which is, I guess if you look for him on social media, he's Gary V, and it's Gary and then space VEE. He's a massive inspiration for me. I watch his YouTube videos every day, but he just says, love your family and work super hard.
Yeah.
And so that's probably my motto.
Yeah.
Family's priority one.
Yeah.
I leave my office at most nights 3:30, 4 o'clock, pick the kids up from school, drop them off at school. I work back late at night, but everything revolves around my kids and my family.
Yeah.
I'll always be there at home from 5 till 7:30 at night, 8 o'clock, because I've seen so many train wrecks of accountants who just work 24 hours a day on work and come home and the wife kids have left. So I want to make sure that doesn't happen to me.
Yeah.
And then, work super hard. You can still work from 8 till 12. I can't do it every night, but there are odd nights. I'll often do 1 to 2 hours at night, just urgent jobs that need attention from my home computer.
Yeah. Awesome.
So, that's quite well.
It sums it up, mate.
What I abide by.
Absolutely sums it up. Now, you've mentioned a couple already during our discussion, but what's the top book that you would recommend people read and why?
It would be 7 Steps to Wealth by John Fitzgerald.
Yep.
It's from the 80s. It's a classic book.
Yeah.
He wrote it in the 80s. I think he retired in his mid-20s.
Yeah.
But it's still as relevant today as it is back then. You can only really buy it, I think, on eBay for about $14, $15. I bought 20 or 30 copies and I've given to all my clients who are interested in property. I just love it because it's so basic and it made complete sense. Every page I turned over, I thought, this isn't another bullshit property story. This is actually real. Yeah. This makes sense. It's tangible. I can actually follow this as a guide, as an instruction. Yeah. And it's quite funny because, I talk about it all the time, my podcast, but I've got a client in Sydney who went to a seminar recently of John Fitzgerald, and he didn't tell me about it, but he just sent me this bizarre photo of, the stage. This was all before John Fitzgerald walked on stage. Yep. The books, up on the desk, the flowers in the jar vase alongside of it, and then one of those advertising pull-up stand alongside with a picture of John Fitzgerald on it. Anyway, I texted him back and said, "Oh my God, you're going to finally listen to my hero. I can't believe it." And there's no response. And then I thought, like 15 minutes later or 20 minutes later, I said, "Can you get me a selfie with him and text it to me?" Anyway, it wasn't him, sure enough. He's reinvented himself. He's got, I think it's Custodian Wealth Advisors or something like that. But anyway, I don't really subscribe to all that. You just need the book and that's it.
Yeah,
but
great book.
It was one of his people that have bought a franchise off of it or something. So it might make him go. But I said that to my friend in Sydney that, if this guy is true and he's actually made all his money, he'd be retired and he wouldn't be giving these presentations. Sure enough, he wasn't. So I think that he is a person that I look up to in property. Yep. He's done it. He was a real estate agent. He's now advising people. We wrote this book ages ago, and it's just got all of his fundamentals that he relies on every time he's evaluating whether he should buy another property or not.
Yeah, it's a cracker. I've read it years ago myself, and it, like you say, it's in really simple, easy to absorb language and a great foundation stone there, mate. Okay, let's talk to podcasts then, because you're obviously a podcast freak as well, and I think you've got 2 podcasts. There's the Medical Accountant, and what was the other one? Yeah,
the other one's the Accounting Insider.
The Accounting Insider, and I've listened to them and a big fan, mate. There's some real gold amongst what you're talking about there, from property, accounting, business, you name it. There's some really usable tips that everyone can take advantage of there. But tell us about the top podcast, apart from those, that you would suggest people have a listen to, and why.
I listen to podcasts for a number of reasons, mainly because I look to them for motivation and ideas and fresh thought.
Yeah.
Dealing with clients all day can sort of get you down a bit because everyone's sort of coming to you with problems all day.
Yeah.
So I get my inspiration from podcasts. I'll tell you all of them because you've asked me the question. Some will probably think they're a little bit bizarre. I love Guy Raz in How I Built This.
Yep.
Mixergy with Andrew Warner.
Okay.
And then from there, I'll probably go to my Christian ones, which are T.D. Jakes.
Yep.
And Jensen Franklin. And I listen to them on Sundays, and they give me inspiration and keep me on track so that ethically I always try to do a ethically, sound job, and where there's a grey area, I always try to keep within the parameters of what I want to be.
Yeah.
And so they keep me on track, and I find them really good. I think listening to these guys, they're always telling inspirational, interesting stories, and I just thrive on that.
Yeah, brilliant, mate. No, I'm not sure the listeners will dive into those. That's awesome, mate. Now, this is a perfect question for you, and it's. I ask everyone this question because it's a topic that everyone I talk to keeps telling me, I pay too much tax. So what's the top thing that you've done and or advise other people to do in relation to paying less tax?
Well, I think that putting money into super every year is tremendously important. The $25,000 a year maximum contribution that you can do when you're self-employed or you're running through a company and a family trust. I always tell people to do that because it's just a given. You need to have money in super, and that's just a really good number to put away every year.
Yeah.
Further to that, I just think of my own example. I always try to buy more property and increase my level of debt. I just think that negative gearing is such a powerful tool.
Yeah.
No one understands it. They tried to get rid of it, but when they found out that so many people rely on it and it basically lost the last election for Labor, I think it's going to be here to stay. So I think that is a great tax planning tool where you can crazy system, and you've got to get the numbers right, but you go out and you buy a property, you're paying more in interest, council rates, depreciation than you are in rent, so you're making a loss. But behind the scenes, it's going up while you're sleeping, and you're not paying tax on that.
Yeah, absolutely. Yeah, well, we talk to clients every day where, if we put them into the right structured property vehicle, and depending on their income and situation, it's not difficult to be keeping anywhere between 8 to 12 grand a year in their pocket, just by virtue of the tax benefits that flow from it. So, great advice, mate. Okay, next question then. What's the worst worst piece of investment advice that you've ever received?
Worst piece of investment advice. I think that, I guess it was basically coming up with spreadsheets and buying properties based on rental calculations and rental returns for me without doing the fundamental research and thinking naively that every property is going to go up in value. I just see it time and time again with first-time property investors. They buy the wrong one and it sets them back 5 to 10 years. Yeah. There's a whole lot of property brokers out there. You've got to, I guess the best bit of advice I got was when I left accounting school on the last week, the accounting professor got up before us and said, as soon as you cross North Terrace, treat everyone as though they're a crook and it will stand you in good stead. And I sort of thought that was a little bit, a bit harsh to say that, but really it's been so true. But I don't see everyone as a crook. Like, I actually trust people until they prove otherwise. Yeah. But from that, I just mean that don't take everything that everyone says as gospel. Do your research and look for the motivation that this person's giving you, and the reasons, the conflict of interest that might be there. Yeah. And be a little bit skeptical and do your own research and come up with your own idea on an investment that's put in front of you. So and like we do financial planning as well. Yeah. And I reckon we do 10 times the level of analysis before we recommend products to clients, because it's like, come up with an answer, pull it apart. What if this happens? What if that happens? Is there a better way? Whereas, so many financial planners in Adelaide are just so busy. They don't have that level of detail. They don't have that level of analysis. I think you've got to do that with any of these decisions. And then, so even with the properties, investments, all of that stuff, technology won the war. technology is more important today than it ever has been. There's so much information out there.
Yeah.
You've got to be across it all
Yeah.
and pick the eyes out of it and use it to your advantage in any investment decision that you're making.
Yeah, I think that's great advice, mate. It's invest in knowledge, but also, I think you touched on a very good point there, and that is always question if you're talking to someone in property or shares or whatever it is, how are they getting paid? And do they do it themselves? I from my own perspective, mate, I just won't deal with anyone in the property space unless they're active investors themselves, because if they're telling me to do something that they either can't do or won't do themselves, there's a big question mark for me.
Yeah, and just while on that, Bushy, sorry, like the number of times that you'll see someone up on stage who's giving advice to all these people in the audience about how to invest their money, and yet they're pulling out of the car park after the talk in their Datsun 120Y.
Don't knock those cars. That was my first car, mate.
No, but do you know what I'm saying?
Yeah, I do, yeah.
You need to get advice from people that are winning,
Yeah.
that are making money, that have been down that road before and succeeded.
Yeah.
And they're the only people that I think that you should ever allow to speak wisdom into your life.
That's a really good point.
Every taxi driver in Adelaide will tell you the next share to buy.
Yeah, I often talk about the law of inverse investment, mate, and I've devoted a section of the book to this, and it's really simple, and that is the more a person talks about investing in property or shares or what have you, the louder they are, the less likely they are to invest it in any themselves. So, whereas the people who get it done don't need to talk about it because it's looking after itself. So, no, that's awesome, mate. Now, final question in this little ambush round: what's a personal habit or habits that you use to contribute to your investment success?
I think that I'm a bit of a control freak. Like, I know this doesn't. People freaks people out, but I'm across everything. I want to know, when a tap starts leaking on one of my properties, and I want to go in and fix it straight away, and all of that. So I guess, I'm really worried about management by abdication. I love management by delegation, where you've got someone competent doing stuff for you.
Yeah.
And I'm happy to trust those sorts of people, but I just don't think that you can just set and forget. You've got to constantly be on call and accessible. And, even as far as taking calls over the weekend, you can never really completely switch off and just outsource it entirely. I think that you really need to constantly have your finger on the pulse with all of your investment, because it can all change quickly, and you need to be one step ahead of the pack.
Yeah.
So I just take a really active role in managing my properties.
Well, we have a saying, I'm interested in whether you think this is applicable to you, but we do believe that property is an elite team sport, and you do need to have expert players who are investors themselves in each and every position that's involved in the whole property sphere. And your job then is just to manage those managers. So you need to be across the information, but you do need to manage them. You just don't just throw up your arms in the air, walk away, and then hope it's going to be okay. You need to keep all of those people on their toes to make sure that they're doing things that are ultimately in your best interest. So, that's awesome, mate. All right. If we look back on our conversation then today, Kim, you've mentioned that you invest in knowledge, you invest in business, you invest in property. But at the end of the day, what I pick up from you is that ultimately I think you invest in relationships, because everything I've heard you talk about is all being built on the relationships that you have, both in terms of your profession and the property side. Would I be accurate in saying that, do you think?
Yeah. I couldn't agree with you more. Like, I am always try to be never burning any bridges, always fostering relationships, encouraging them, to the point that when your normal emails come in and someone sends you one that's a little bit abrupt and pointed and aggressive or whatever, for one reason or another, it's usually because they're having a bad day or whatever. I always respond nicely and, never talk down to people, always try to build them up and encourage them and motivate them. And, and I think that what goes around comes around. And I think I feed off of that, and people see me as a bit of a motivator and all of that. So, relationships are really important. I try to build on them and network and leverage out of them as best I can, and I think that's probably one of my skills.
Yeah.
Because you can be the best accountant in Adelaide but have no customers. Yeah. You can know the tax act back to front but still have no customers. It all comes back to relationships and networking and getting the work in the door, and that is a reflection of how well you are liked and received by your peers and viewed as a thought leader in that space.
Yeah, spot on, mate. You summed that up beautifully. So what's next new and exciting for Kim Nitschke and Nankaro accountants?
Yeah. Well, we just want to get better and better at what we're doing. We've identified our ideal client. I mean, that came to me when I was snowboarding on Falls Creek in September last year. So, that was a light bulb moment for me. So we are every bit of social media stuff that we do revolves around our ideal client.
Yeah.
So the business is just getting better and better. We want to get better at it. There's areas that we can work on. We want to more or less develop an algorithm for doctors and where they are on it, and sort of like feed numbers into a spreadsheet to say, you want to end up retiring on this, which is, your current standard of living. How do we get that, and how does the computer spit all that out, and where exactly are you on the journey? So we're working on that.
We need to get our heads together, mate. We need to get together then, because I've already got one that we use. It wouldn't be anywhere near as sophisticated as what you do, but as a rough rule of thumb, it gives them a snapshot very quickly on where they're going to end up if they just do continue to do what they do, and what the gap is, and what the opportunity is then to bridge that gap. So we've probably got some common interests in that regard. So let's make sure we get together on that, mate. And I call it the freedom numbers because we break it down to a really easy process that makes it very easy to digest and very easy to get a snapshot on, okay, I get where I am now, and I've got a very clear picture on what I need to be doing between now and then to make that happen. So let's make sure we catch up on that, Kim.
Sure. Sounds great.
Awesome. And for those, then, I know there'll be a lot of listeners that feel very comfortable with the expertise you bring to the table from an accounting and a property front. So what's the best way for them to get in touch with you, mate?
If you go to accountinginsider.net and click on the links, you'll be able to email me from there.
Terrific, mate. Well, look, always enjoyed talking to you, Kim. You've shared a lot of gold with us today that I know that the listeners are going to get a lot of value out of. Looking forward to continuing the dialogue on a number of areas. So appreciate you giving up some of your very precious time today, mate, and look forward to talking to you again soon.
Thanks, Bushy. It's been great, the journey so far, and I think it's all going to go to the next level. I mean, you're doing amazing things in this space. Take my hat off to you. So, yeah, thanks for having me on the show.
Appreciate it, mate. Look forward to talking to you soon. Thanks, Kim.
Okay, great.
Bye,
thanks,
mate.
Bye-bye.
Well, Freedom Fighters, how good was that? To get a summary of all this investment gold in the show notes, just email me on hello@khgroup.com.au. That's HELLO@khgroup.com.au. Or check us out at www.bushymartin.com.au/get-invested. I look forward to joining you next week for another episode of the Get Invested podcast. So thanks for listening, and as always, dream as if you live forever and live as if you'll die tomorrow.